Same time, there's a lot more risk involved there. There's a bigger chance that these companies could default, and we're starting to see that, of course, with Evergrande, and it could spill over into this $400 billion junk bond market in Asia, and from Asia it could spill over everywhere else. Thursday, September 23rd, 2021, Monaco 64, home of alternative economics and contrarian views. Very interesting thoughts I have today, and that's what I try to do. I've said in the past that one of the reasons for starting this channel is that I wanted to basically talk to the world, to the general public, as I did to my institutional clients when I worked in the City of London. That was part of my job every morning, getting on the phone, talking to my clients, telling them what I thought, not just about the markets, but economics, politics, geopolitics, and how that could influence the markets, bond prices, currencies. And I have to say, I'm glad I'm talking to you now, because the world out there is so artificial. The leaders of the world, not only political, but monetary leaders, economic leaders, social leaders, are painting a world that doesn't exist, and they're taking the general public's eyes away from the real problems out there. And I think Evergrande is a big problem. Many people, and even I, have to admit that a week or two ago, I thought it wouldn't be a big problem, but it has the potential to be the first domino in the bond markets. That's right, the bond markets. Even though the amount of foreign bonds that Evergrande has is not that big compared to the size of the bond market worldwide. I think the bond market is more than 100 trillion. It's bigger than the stock market. And yes, yesterday we had the Federal Reserve as well. They're promising to do things that they should be doing right now. They're not going to stop inflating. They can't, especially with what's going on now. And on the political side, I would say in my lifetime, I haven't seen two big clowns like we have now in charge of the US and the UK, Joe Biden and Boris Johnson. It's just amazing. I guess it's a symptom of the collapse of our culture, the collapse of our economy, the collapse of the financialization. We've had almost 40 years of where we live beyond our means. And I don't mean you or me, but in general, people think that they can keep borrowing and borrowing, and that they don't have to produce anything, and that their house prices are going to keep going up, so they're going to be getting richer. And I think Evergrande could be the trigger, because Evergrande is having an impact on the junk bond market in Asia, which, according to the FT here, is a 400 billion debt market, which is quite big. Evergrande has about 20 billion, according to them, in offshore or dollar bonds, but 400 billion could start making a dent. And what is the junk bond market? Well, the junk bond market are loans, or securitized loans, because that's what a bond is, issued by companies that don't have a very good credit rating, that are not as profitable. So what the higher yields in the junk bond market mean is that these companies, they have to pay more interest to investors because they're riskier companies. So it's not necessarily a good thing for investors. Yes, they are getting more income because they're getting a higher yield on their investment, but at the same time, there's a lot more risk involved there. There's a bigger chance that these companies could default, and we're starting to see that, of course, with Evergrande, and it could spill over into this $400 billion junk bond market in Asia, and from Asia it could spill over everywhere else. And in a world where central bankers have been manipulating interest rates lower, and still are, because that's part of the game. They want to keep the deep state alive, not only in the US, but in the UK and in Europe, because that's how they finance this criminality, I would say, because that's how the world is gone, in my opinion. And the people suffering, of course, are the general public. So we've got a clown called Boris Johnson in the UN saying the biggest threat to the world is climate change, while here in the UK, people are concerned about whether they'll be able to pay their bills this winter. We've just had the 7th energy company collapse in the UK. And all they can talk about is actually talk about a windfall tax for some of these companies that are supposedly making big profits from energy prices going up. It seems crazy because the government has put caps on the prices these energy companies can charge their clients, and that's why they're going bust. And now they're talking about taxing the ones that are successful. That's going to make it even worse. But back to Evergrande, what I think it could trigger, because of the low interest rates, investors all around the world, especially in the UK, US, and Europe, where their central banks have kept rates at 0 or even negative, and now rates are really, in real terms, are massively negative because we've got rising prices. The effect of all the inflation we've had in the last 12, 13 years is taking hold of consumer prices and prices of services, and it's not going to get better. So what happens here is that investors have flocked to riskier bonds because they don't want 1 or 2%. They want maybe 5, 6, or 7%. And as you can see here by this chart, this is the average ICE Bank of America High Yield Asia Dollar Bond Index. And this is from January this year. And you can see that it was trading between 7 and 8%. So you think a fund manager or a pension fund that has liabilities that have promised an income to pensioners or investors, they're saying, wow, 7, 8%, that's a good, in dollars, that's a good yield. And the Chinese government will never allow this company to fail. And in this case, these are all Asian bonds. And look at where we're now. That's not a good thing that the yields have gone up. They've gone from 7 to 12. This reminds me of the European sovereign debt crisis in 2011, 2012, because what you need to understand, bond prices drop when yields go up. So that's a very bad signal there. And yes, it's only the junk bond market in Asia, which is around 400 billion, but it could spill over into higher rated bond markets, from junk maybe to just investment grade. And as we know, the whole system is very leveraged through derivatives. I've spoken a lot about derivatives in the last few years, how we've got over 1,000 trillion in derivatives, which is over a quadrillion. Of course, the powers that be tell us that it's about 600 trillion, but again, they're lying to us. So derivatives allow investors and speculators to leverage things even more. And it's a cocktail for disaster. It's what caused really the crisis of '08. Just watch The Big Short and you understand why. Most of you probably have watched it many times, like I have. And the main character from The Big Short, Professor or Dr. Michael Burry, he saw that. He saw that the whole system was leveraged. The housing market was leveraged. All the and other characters in that movie saw how the derivatives market was just a casino, and nothing has changed. And actually, recently, Dr. Michael Burry is saying that the next big short are the fiat currencies. What does that mean? It means what I've been telling you is the crack up boom, the hyperinflationary collapse. And hyperinflation is not cost push inflation that we're having now, even though it starts kind of with what we're having now, the rising prices. It's when people lose confidence in the currency and they want to hold anything but. And I think all these shortages that we're seeing as well now bottlenecks in the shipping routes. We're seeing the Baltic Freight Index at 12-year highs. That's just a sign that producers, maybe producers don't want to get rid of their valuable real things for fiat trash. Maybe that's why Russia wants to hold back selling a lot of its natural gas, because they know what's coming to the world monetary system. So it's a huge mess. And I know there was a lot of volatility in the markets yesterday after the FOMC, but I would ignore all that noise. Just like we need to try to ignore what we've been told about our health, that our immune system is no good anymore. We need to ignore the economic monetary leaders telling us that a system that is up to here in debt and leverage, that sustains fiat currencies created out of thin air, are the place to be. That's all I have to say about that. So yeah, it's very frustrating out there. I think a lot of people are going to get hurt, unfortunately, this winter. And I'm not trying to be a scaremonger. I'm trying to be a realist. I think energy prices are going to be even higher this year. A lot of these companies that are going bust in the UK, they were companies that were giving consumers a really good deal. So now they're having to be taken over by other companies, and there is a cost to that. And the cost will be in higher prices for these people whose companies have gone bust. And we're not going to stop seeing the rise in commodity prices, in energy prices anytime soon. So yes, we need to keep an eye on the bond market, the Asian junk bond market. As I said, it could spill over into, eventually it could spill over into treasuries, which are supposedly the safest of bonds, right? And we could see a move down Exter's pyramid. We could be seeing that right now. And what's at the tip of Exter's pyramid? Well, it's gold and silver. Of course, paper money is just before that. So paper money might be something to consider having, even though, in my opinion, if you don't have gold and silver, I'm not saying things are going to go horrible, and I'm not for you, and I'm not saying things are going to be great for even those people who do, but it will help you, I think, because this system is really teetering on the brink, I think, and listening to Jay Powell or Boris Johnson or whoever out there, they're not telling you the truth. They're trying to keep this Ponzi scheme going, this system going, and you need to have some more discernment, I think, and realize that things are not as they seem. So you saw there that Billy just jumped off the sofa. He's okay. He got up quite early today. He actually came downstairs before I did. he's having some trouble going down the stairs because his vision is not great. He's almost, well, he's 13 and a half almost. But today he came down on his own, which is good. When we finish here, doing this video, publishing it on all kinds of other platforms aside from YouTube, Billy and I will go for our usual walk. So right now it's 8:54 a.m. London time. We've got spot gold at 1765. Range has been 1770 to 1760. So pretty quiet overnight. Gold not making any big moves. Silver is up 3 cents at 22.70. Yeah, and the illusion continues. The Fed continues to inflate, to create money out of thin air, to keep rates at zero, and we're seeing prices rise everywhere. And instead of, if there were really legitimate central bank, and that's like an oxymoron these days, calling a central bank legitimate, they would be raising rates, they wouldn't be doing QE, right? But the world is screwed up, and we've got the 10-year yield basically unchanged at 133, with the stock market going gangbusters as well. That's all they want to do is keep the stock market goosed up and keep rates artificially low. So right now, the Dow futures up 200. The NASDAQ 100 futures up 88, and the S&P is up 27 points. So they're up just over 0.5%. I think what the market is saying here is that they don't expect this Greenspan put, Fed put, Powell put, whatever you want to call it, to ever go away. Yes, they'll accept them talking about tapering and rate rises in 2023, but when push comes to shove, if there's trouble in the markets, the Fed will come to the rescue. That's what they're saying. But I think at this juncture, it's even irrelevant if you're mostly out of the system like I am. Who cares what Powell says? Who cares what the Bank of England says? Who cares of what Christine Lagarde says? I couldn't care less. And that's how it should be if you're out of the system, in my opinion. So what about the FX markets, the FX update? Well, we've got sterling up 0.25%, 136.50. The euro's up 0.2%, 117.10. The dollar is up slightly versus the yen, just below 110. The dollar's unchanged versus the yuan at 646.72. The Aussie dollar is up 0.25% at 72.60. The dollar is down 0.75% actually versus the Canadian dollar at 126.80. And the New Zealand dollar is up almost a third at 70.24. WTI crude 72.20. That's unchanged from overnight. But I think we were around 71 yesterday when I spoke. High-grade copper is down 0.33% at 423. Natural gas is down 0.33% at 481. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.